Hello everyone. Welcome once again to Kotak Securities Weekly Fundamental Podcast. I'm your host Rini Mehta. Last week stock market started on a positive note, but correction on Friday erased most of the weekly gains. If we see BSE Midcap and Smallcap index, they outperformed Sensex and Nifty. Most sectoral indices saw marginal gains during the week. Recent market rally possibly reflects increasing expectation about peaking of inflation, commodity price correction, and decent earnings visibility. If we see on the economy front, India's July CPI inflation, that is retail inflation, saw moderation. Further, some decline is being witnessed in oil prices. Then first quarter results were broadly on expected lines. Also, FPI flows have started to turn favorable. So on that note, let's look at the foreign investor activity as well between 1st to 18th August. After being net sellers in the past few months, FIIs turned net buyers month till date to the tune of rupees 16,859 crores as hope mounted that the global economy may avoid a major downturn following some softening in inflation. So we expect FPI flows to remain volatile in the coming months. However, with the fading concerns of rising inflation, tightening of monetary policy and first quarter performance, flow may improve in the emerging markets. Now moving on to the stock ideas for the week. Our pick of the week is Max Healthcare with buy rating and target of rupees 425. The stock seems to be in the fast lane, guys. Max delivered yet another strong performance in first quarter, surpassing our EBITDA estimate by 14%, primarily led by higher average revenue per occupied bed. Importantly, key growth initiatives like ongoing bed expansion, target reduction in institutional mix, and recovery in international footfalls are well on track. So we expect Max to deliver a healthy 16% EBITDA CAGR, that is compounded annual growth rate, over FY22 to 26, led by the factors I talked about. And we maintain ad rating on the stock and raise our sum of the parts base fair value to rupees 425 from 410 earlier, which is offering 14% upside from the current market price. Now I would like to share some key takeaways from group meetings with investors. On UPL, we have buy rating with a target of rupees 875. So we hosted UPL's president and COO Mike Frank and global CFO Anand Vora last week in a virtual group meeting with investors. So management sees potential to drive down receivable DSOs by 15 to 45 days and inventories by 10 to 15 days over the next 18 months, and reiterated guidance for $400 million of debt reduction in FY23. The demand outlook remains positive, with crop prices likely to rise on the back of drought in Europe and the US Midwest, while margins could possibly improve as input costs correct in coming quarters. So guys, that's all for today. See you again next week. Signing off. Thank you.